So let's clarify what is support. Well, support is actually the level where buying pressure overpowers selling pressure, preventing any further price fall. Think of it like a floor, as we said. A support zone is the perfect place to be looking for opportunities to buy the market. What is resistance? Well, it's the level where selling pressure overpowers buying pressure. Okay, so it's exactly the opposite. This is where it prevents any further price rise. It's a ceiling above the price. A resistance zone is the perfect place to be looking for opportunities to sell in the market. So it doesn't necessarily mean it's only horizontal, because that's one type of resistance. Also, for example, when the market is trending lower, these are going to be resistance points. Okay, diagonal. So you have basically what we call horizontal support and resistance, and diagonal support and resistance. Okay, so when the market is trending, you have diagonal, and when the market's going sideways, you have horizontal. So make sure you write that down, guys. So what you want to do is the following. Open up your chart, identify the swing highs and the swing lows on the chart like this, and then start to draw your support and resistance levels. Draw a horizontal line at the high or low of these swings, and the idea is to find past areas of support and resistance that have held in the past. You can adjust your line between the high and low and the body of the candle to find the perfect line. In other words, it's okay to go through the wicks here. Okay, we call these wicks, but don't go through the body. Candle wicks are seen as areas of rejection, so at this level the market is likely to hold again. The more rejection we've had at the same level, the more important the level. So here's an example of what this looks like. So you can see over here, notice how this is an area where the market held, and it held again right here, and it held again right here. And then eventually notice how the market breaks this area here, and then look how it ends up coming where it was resistance and now becomes support, and support again, and support again. So notice how that market holds there really, really nicely. So as soon as you break through this ceiling, it then becomes a floor. Okay, so past resistance becomes future support. So what is a trend? Well, in the Forex market, the trend is generally the direction of the prices. The trend can be classified in one of three ways. You've got an uptrend, a downtrend, or no trend. Okay, also known as consolidation or range bound market. What are trend lines? Well, a trend line is a line drawn on a price chart to help a trader identify the trend. It's formed by drawing a diagonal line between two or more price pivot points on a chart. The third touch is a potential trade in the direction of the trend, and it's actually the confirmation of the trend. A tip is look for the closing price rather than the spikes when assessing whether the trend line has been held as support or resistance. This is important because sometimes it isn't clear and people draw different types of trend lines. What we teach is for you to draw the very same trend lines every single time, just consistently. But if you use the closing prices rather than the wicks, it will tell you when a trend line has been broken. So generally, here's some tips. 2 points can be connected to draw a line, but you need a third touch to confirm the validity of a trend line. The more touches you have, the more relevant that trend line. You also want to learn to study the steepness of the trend line. Okay, so if you've got a really, really steep trend line, the market is then moving very, very fast, but unfortunately the probability is that it won't last for very long. So you can use it for short-term gains, but the probability is that eventually it will break and go back to a more sort of normal trend line. So what is a break? Well, an impulsive close 50% of the candle above a trend line that the market has not closed above before. That's what I would class as a break. So here's an example. Notice how this is a supporting line, and it's what we call a counter trend line. Breaks and closes below this line, and it is 50% below that line of that candle. So therefore that would class for me as a break and an area that we could be looking to actually sell this market there. So how do you draw trend lines? Well, to draw lines, you must firstly identify the market direction. You do this by identifying the highs and the lows. In an uptrend, you must connect the lows. So here's an example. The market, you can see we've connected these lows here. Okay, and eventually notice how the market breaks and then goes back and retests these highs, and then eventually the market goes lower. In a downtrend, you must connect the highs. So again, very similar. So notice how the market is in a nice downtrend, connecting these highs. So we've got one touch, second touch, here's the third, and that's where you'd be looking to sell. Eventually the market creates a nice inverse head and shoulders pattern, and the market breaks back up higher. So here's an example of what it looks like when you're connecting the trend line. You can see where it's highlighted here, points where the market basically acts as a support area. So this is what we call a support zone, support zone, support zone. So these are areas where we're basically looking for buying opportunities. Okay, so nice trend line. Continued. Here's the third touch, the fourth touch, the fifth touch, the sixth. Okay, this is near the zone. It doesn't quite touch there, but again, you're still looking at this as a zone to be looking to buy. You can see actually there, this is a nice actual morning star formation, which is a great setup there as well. Okay, so lots and lots of opportunities there, and if you just simply played counter trend line breaks, you know, you'd be well in the money just trading these. Once you've picked the direction, it's very, very easy to, you know, you could also play breakouts, for example, there of resistance.